Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today, we've got Justin Huhn with us. He's from Uranium Insider. And if you're interested in contacting him, because I know a lot of people, they don't watch the full clip, so you can contact him on Twitter. What's your Twitter name on there?
It's at Uranium Insider.
Okay, so if you want to contact him with questions, hit him up on Twitter. So I'm going to ask the most obvious question right off the bat that a lot of people ask me. When are we going to boom? They always ask that question. I'll just start with it. So what's your opinions on, when are we going to take off? When will we sustainably just continue to track higher and not really do these back and forth retracements?
That's a really good question. I tend to believe we're going to see some strong moves throughout the remainder of this year. Unfortunately or fortunately, depending on your time horizon, we have a backdrop of a relatively weak broad market and practical guarantee of some form of mild recession at the very least in Europe and the US. How that's going to affect equities going forward, I'm not really sure. We're certainly seeing strong signs of an outperformance by energy, by oil and gas stocks, by uranium stocks. We're actually in the green on the year, which is pretty amazing considering the amount of wealth that's been destroyed this year across multiple markets. But I can't really say exactly how much that's going to affect us. I tend to think that when we have a gently weak broad market, that we can pretty easily outperform and decouple. And when we have really steep downdrafts in the broad market, it tends to couple everything with it as like a quote unquote liquidity crisis. We saw a number of days like that, even a number of weeks this year. Late April, we definitely saw that. We saw that, I believe it was late May or early June, as kind of a second wave of that. Seems like we kind of bottomed in July. I would be surprised if we revisit the July lows for uranium equities. If we do, I'm going to be about as aggressive as I've ever been on the long side to the extent that I can with the available funds that I have, me speaking personally, because my confidence in what's coming for the nuclear fuel cycle and for the price of uranium has pretty much never been higher. I've always been confident in the long term of this trade, of this investment. But my confidence in the short to midterm is uniquely high. I don't really like making calls for the short term. So the when we boom question, typically, I get asked that pretty frequently actually. And that usually comes from people that have entered this over the past year, possibly bought the highs of last autumn and are getting frustrated with, how the markets have been this year and how the uranium equities performed since the highs of last year, when everything has only moved in a pretty resoundingly positive direction, fundamentally speaking. So that's a really long answer to what should be a really short question. I would say, I think that we're going to see positive movements in the price of the commodity very, very soon. To see a stable spot price of uranium through an absolutely dead silent spot market in June, July, August, and to not see that price be manipulated down by motivated sellers, and to be sitting here at $50 a pound going into what I think is going to be a particularly strong season for uranium. It is strong on average. Q4, Q1 is kind of really where uranium shines. On average, doesn't happen every year. It was early last year, and that had to do with SPUT coming on the scene. This year, I think it's going to be particularly strong because of what we're seeing in conversion and enrichment and how that's about to come to U308. So when do the equities boom? That's a much harder question to answer. That really depends on funds flows. But typically the equities will follow the commodity. And I think the commodity is going to move substantially between now and the end of the year.
That's great. That's great to hear. I agree, just looking at the charts too. What do you think is the most important piece of news out there right now regarding uranium, at least to you? Or what is the most important, it doesn't have to be news, but what do you think is the most important development fundamentally, news-wise, whatever it is, that's happening right now?
I think that it was a very small piece of news that came out literally today, if not yesterday evening, and that was that Urenco, who is an enricher, they have facilities in the EU and one in the United States. So they're a quote unquote Western enricher. They communicated with the Nuclear Regulatory Commission in the United States that they intended to bring their centrifuge manufacturing facility back online, and it should be operational by the beginning of 2024. At which point they would start manufacturing more centrifuges to expand their enrichment capacity. And it's kind of a small bit of news, and it doesn't really move the market. But what it is, in my opinion, is confirming of what we've been talking about for the past few months, which is essentially Western enrichers are seeing substantially higher demand for enrichment contracts, and that is coming from Western utilities. And Western utilities make up about 70% of the global utilities for nuclear. While Western enrichment is only about 40% of global enrichment capacity. So the rest exists in the East, primarily Russia and China. Russia themselves are 40% of global enrichment capacity. What's happening right now is while Western utilities are still receiving deliveries of Russian nuclear fuel, particularly enrichment, enriched uranium product, Western utilities are not signing new contracts with Russia. And from what I've heard from all of my contacts, that's not happening. There's no new contracts being signed with Russia. And those new contracts are going towards going to Urenco and Orano for enrichment, Orano for conversion. And so, and Cameco, Orano and Cameco for conversion. So really what this means is seeing Urenco saying, okay, we're going to bring this facility back online and we're going to expand our capacity. That's basically confirming that they are seeing higher demand, because they're not about to do that. It's very, very expensive to expand enrichment capacity. So the New Mexico facility has, I believe it's 4.7 million SWU. It's going to cost them at least $1.5 billion to add 1 million SWU. So for them to jump up capacity by, let's say 20%, it's going to cost them, at least $1 billion, pushing $1.5 billion. And that demand is there. And so they're confirming that. And that's on top of what we've already been hearing, that their tails assays have already risen from, the high teens up to the mid 20s. So they're now, operating centrifuges at 0.24, 0.25, the tails assay, and that's up from 0.18, 0.19, 0.17, up to maybe 0.2, just in recent past. And so what that really means is the higher tails assays that they're operating at requires more uranium in the front end of that process. And I can geek out on that if you want, but I don't really think it's super necessary unless you want me to. But really what it means is these Western enrichers are running at full capacity. So they're not using excess capacity to underfeed and to re-enrich tails material. So at 40% of global enrichment capacity, if that underfeeding is gone, let's just say that's 40% of 25 million pounds, which is about 10 million pounds of underfeeding from the West that's gone. On top of that, the shift from underfeeding to overfeeding because of this higher tails assays operation is adding it's adding a significant amount of demand for uranium. It's probably to the tune of 20, 25 plus million pounds a year. So we're looking at a total swing of anywhere from 30 to 40. I've even heard industry players say we could see a 50 million pound swing from demand to from supply to demand, coming from underfeeding from the West gone, now to overfeeding, higher tails assays, higher demand for uranium in the front end. It's a very, very large shift in the way that the nuclear fuel cycle will be operating in the West and the way that Western utilities will be operating going forward.
So basically, we've got these massive market imbalances swinging from a surplus to a deficit, looking historically versus looking in the future. What do our inventories look like right now? What does this all look like? Is it drying up? Do we still have some pounds out there that people are kind of hiding in their closet somewhere? But what's out there? What's left? Do you think this market deficit is just going to blow through our inventories quite quickly? And what is that going to look like inventory wise and market deficit wise?
That's a really good question. So generally speaking, the past few years, there's been a relative inventory drawdown. And what that means is utilities have been able to top up inventories with short and midterm contracts with carry traders, spot market purchases, et cetera. and their inventories have been relatively flat to slightly falling. So right now, U.S. utilities are just around the 2-year mark, maybe slightly under, and that's 2 years of inventory across the fuel cycle. So they might hold some U3O8, some UF6, some EUP, some fabricated fuel at the facility. All of that will culminate in an average of around or just under 2 years worth of inventory, which if you think about it, the entire fuel cycle from mined uranium to fabricated fuel can sometimes take up to 2 years. And so with the Russians, that was certainly a faster fuel cycle, let's say, because you would have uranium coming from JVs in Kazakhstan, and then it'd be converted. It'd be converted in Russia. It'd be enriched in Russia. The fuel would be fabricated in Russia, and it would all just be boom, boom, boom. So they could have potentially a 12-month fuel cycle, where most of the time it's on average maybe around 18 months. So if you consider 2 years of inventory with an 18-month fuel cycle, you're really not sitting on anything in excess that makes you feel all that comfortable in the global fuel market that we're looking at right now, which is fragile. Let's put it in a single word. It's fragile, and it has been, and now we're seeing, what's happening in Ukraine basically shake up that fragile fuel cycle. Kazakhstan kind of caught in, walking a razor's edge as well. So to wrap that, so the U.S. is sitting on around just under 2 years. The EU, they typically require the nuclear utilities in the EU to have 3 years of inventory, and they're right around that 3-year mark, maybe slightly over. China has a ton of inventory, but they are building so fast that they are still looking at, in my opinion, they're probably going to be rolling up further assets. That's probably going to be in Namibia, most likely, because they already have a significant presence there. They're comfortable there. They're operating there. The Husab mine is pumping out uranium. That one's taken a lot longer to develop and get up to speed, but I think they're around 8 million pounds a year, and they probably are going to ramp up on that. But they just came out today saying, Bloomberg did an article saying that China, they're shooting for 6 to 8 reactors, 6 to 8 reactors per year, but they have the capacity to do up to 10 new reactors hitting the grid on an annual basis. And they're currently building 21 reactors. So the fact that they're sitting on 300, 400 million pounds of inventory, it's basically irrelevant when it comes to the global market, because they're not really going to be selling that. And you have CGN, that's an up and coming and significant already player within the global nuclear fuels market. So they're going to be selling pounds here and there that are coming from primary production from Husab or wherever it might be, Kazakhstan JVs. But as far as inventories are concerned, the nuclear utilities are historically sitting on average to slightly below average inventories. And the deficits of the past few years have caused a bit of an inventory drawdown. So certainly over the past number of years, we've seen what the guys from Sachem Cove would call a destocking of inventory. And they've been able to keep, a decent amount of inventory through these short and midterm contracts and carry trades and spot market purchases. And now we're shifting into this period where carry trades are essentially off the table. I mean, there might still be some shorter term, smaller volume stuff out there, but higher interest rates and a volatile price environment for uranium, the carry trade is not what it was 2 years ago, not by a long shot. And so that sort of solution is sort of off the table. Spot market is incredibly thin, so utilities are certainly not going to be relying on that. And all of this is to kind of culminate in a long-term contracting cycle that's basically already starting for uranium. So we've seen that conversion and enrichment contracting pick up this year. We've seen already 75 million pounds contracted long-term in U3O8 this year. I sincerely believe we'll breach 100 million pounds for the year, and that'll be the first time since 2012. So we're kind of at the early stages of a contracting cycle. Despite inventories, Japan is sitting on inventory. They've decommissioned 20 reactors of their 54. So they've only have, let's say they have 33 operable, 9 restarted. They're wanting to accelerate those. We heard that they plan on accelerating that restart to 7 more restarts by next year, or in next year, by the middle of next year is what the Prime Minister had stated. And about half of their inventory sits in fabricated fuel. That's not something that gets sold into the market. So could we see more pounds shake out of Japan in a higher price environment? Sure. I think that if we see, uranium 75 to $100 a pound, 2023, 2024. That certainly could shake some pounds out into the market, but the demand picture has changed so drastically, it's not really any concern of mine.
Here's a question about inventories as well and market balances. We're seeing a lot of the news with a lot of different reactors being extended or either coming back online. Do we have inventory for those reactors? I know Japan, obviously they do, but what about all these other ones like Diablo Canyon and all these other reactors we see that are being extended? Maybe Germany's going to do it. Maybe wherever else we see these, this news, and it's quite a bit of extensions that are happening. It's not just one or two or three areas. It seems like it's happening all over the place. So do they have inventory for that, or do they have to go secure more uranium for those extensions?
It really depends on when the extension takes place relative to the planned decommissioning. So for Diablo Canyon to be planned to be decommissioned in 2024, I'm certain that they are not sitting on sufficient inventory to operate out to 2030. So they're going to have to come back into the market. They have sufficient inventory to run the reactors beyond 2024 to begin with, and then have deliveries out in 2025, 2026, 2027, beyond. That's possible. And they'll probably be able to run it at a potentially reduced capacity to extend that time period for which they need to do a maintenance shutdown in order to swap out nuclear fuel. But they're definitely going to have to come back into the market. This Palisades reactor in Michigan that was just shut down a couple of months ago, the operator of that reactor is considering bringing it back online now that we have production tax credits built into this latest bill from the federal government. So that's a good sign. They're going to have to come back because that's been a planned decommission for quite a while. If a reactor is set to come offline, like what France did, for example, is they had a number of reactors that were potentially going to be taken offline in 2025. They reassessed that situation in 2020 and decided to give 10-year life extensions to a bunch of reactors in France. So those and those reactors are operated by EDF, which is about to be 100% state-owned entity. They'll have no problem with sourcing fuel and having inventory across their company and geopolitical regions where they can figure that out. So in some cases, yes, there's inventory that will buffer a smaller extension. In some cases, no. So, but anytime there's a planned decommissioning that gets a life extension, you have to model that out in that supply and demand modeling going out into the future.
Yeah. Here's another thing that I've got a question on. It deals with inventories, market balances, and all that stuff as well. When inventories start to dry up and we get really, really thin, and I don't know if we're exactly at that spot or we're getting real close to it. We've got, Kazatomprom's feeding a fund of its own. We've got the Sprott Physical Uranium Trust. We've got these trusts out there, and they're soaking up some physical pounds out there. What happens when the inventory gets really thin and these trusts start having problems obtaining physical pounds, and they start putting bids in, and they don't really see too much out there for physical pounds to buy? What happens if people keep piling money in at a faster rate than they can acquire physical pounds?
Well, I think in a situation like that, we'd obviously see some pretty significant price response. But for ANU Energy in particular, those pounds are already kind of set to come from Kazatomprom. And interestingly enough, they just guided that they were going to go from 20% below their subsoil use agreements that they've operated at for the past couple of years and have guided out through next year. Starting 2024, they would go to 10% below their subsoil use agreements, which is about a 9 million pound increase in production. And ANU Energy is planning a follow-on raise of $500 million for purchasing in 2023. At these prices, that's 10 million pounds of uranium. So it's interesting that if we do see interest in that fund in the East, that could easily soak up the excess production that is planned to come from Kazatomprom starting in 2024. As far as the Sprott Physical Uranium Trust, I mean, it really is all about the funds flow. Now, what we saw last year is we saw a market that very quickly became backwardated. We saw, the spot price jump so quickly and breach the long-term contracting price and the midterm price of uranium so quickly that what happened was carry traders that were holding pounds on their books for future delivery to utilities for a legacy contract they signed with the utility in years past, those pounds they held on their books, they sold to Sprott, and they covered themselves. They covered that short by securing a midterm contract with a producer. And so you have, because the producers that are not selling into the spot market, so that's Cameco and that's, Kazatomprom, they have a trading arm, but they don't sell directly into the spot market. So if you were a carry trader and you could sell and you secured a long-term contract, let's say at $35 a pound, all of a sudden you could sell those pounds to spot for $45, and then you could cover for $37. You're nicely in the money there. So that happened. That was the reverse carry trade, or the carry unwind, as it's sometimes known. That happened pretty substantially last September up to October into November with a bifurcated market. Now that provided some temporary liquidity for the spot purchases by spot. All right, because those weren't necessarily spot market pounds. Like everybody thinks the spot market is just this marketplace where there's these drums of yellow cake sitting, and once it's gone, it's gone. That's not really how it works. It's really just a sale of uranium within a 12-month delivery or settlement period. So, but we believe that a pretty chunky amount of what would be available for this carry unwind did in fact unwind, probably to the tune of 25 million pounds got unwound. Is there more held in carry that could unwind if we see further backwardation on another strong run? Probably. How much? Nobody really knows. Maybe it's another 10 million pounds, maybe a little bit more than that, but probably not a whole lot more than that. So that's a small buffer that's most likely going to get worked through on another strong influx of funds into the spot vehicle. Beyond that, there's always sellers of uranium that are hanging on to pounds, at a certain price point. The Japanese, for example, to the extent that there is some inventory in U3O8, and there is not a lot, but it's some. If you're a Japanese utility that's still holding U3O8 on your books, or UF6 for that matter, but SPUT doesn't buy UF6. So let's just say U3O8 for this example. And you bought that in 2006 for $85 a pound. And you feel that the market will return to that level at some point, and your particular reactor happened to be decommissioned. Well, when we get back up to that price point and you want to unload it off your books, you probably will. And so there's certainly going to be some pounds that shake out at higher prices. But interestingly enough, and you probably know this following commodities markets for a long time, you would think that higher price environments that just really shoot up shake out a lot of supply. And over time they do when new supply is brought online. But a lot of times holders of inventory hang on more tightly in a rising price environment. And it's just like the stock market, It's like buyers come in when the price is going up and they sell when the price is going down. And it's kind of perverse coming from a contrarian standpoint, because, even operating this newsletter, it's like we have a lot of interest in the newsletter when the prices are soaring, and when everybody should be buying, when nobody cares about the commodity and about the trade. Nobody cares about our service either. And that's really interesting, right? And so this last summer, it's like I was pounding the table. It was July. We were back at valuations relative to the commodity at the same level from the beginning of the bull market period, like December 2020. And I was like, guys, this is it. And then and the rising price environment is coming for the commodity. So this is the time. And but that's just how it is. So in a rising price environment, sometimes holders of inventory hang on more tightly to inventory. So that's a really long answer, but what happens when there's a strong bid and not a lot of inventory? We'll probably see very, very strong price movements to the upside.
And I know I'm kind of going out on a tail here. So there's a couple of things that I'll ask. Maybe it deals with the risks of uranium or whatnot, or maybe they're not risks. So these guys come in, I'm calling about the trusts and whatnot. They buy up the physical, they drive the price way up there. Is there any I'll say any risk or any problems where the mining supply can't get on fast enough. They launch this uranium price way up. The response time is too slow, and it actually spurs individuals or countries or whatever to actually look for alternative energy sources, where it actually spurs almost development of energy because the response time is too slow in some of these mining companies. Do you think there's any risk there, or do you think we're kind of locked in? We have to kind of run the nuclear route, and this is what we've got out in that world, or is there alternatives? I mean, I kind of thought of this because the deficits get so large. If too many people pile in, we moonshot it too much too quick, that maybe people say, forget it. I don't want to do nuclear. I want to do something else. Do you think that risk is out there?
I mean, at a certain price point, definitely. At a certain price point, definitely. What is that price point? I don't really know. I mean, if you look at where the price peaked in the previous market, which, you know, it got above $100 a pound. I think it peaked out $134 a pound. That last spike from 100 to 134 was largely driven by financial players, right?
Mm-hmm.
So, but you did have utilities and certain fuel buyers actually paying north of $100 a pound for uranium, and supposedly they've never lived it down. And so, but interestingly enough, for uranium in particular, now, of course, the price of uranium typically doesn't rise in a bubble. You know, the entire fuel cycle rises, but you have the total amount of your operating budget for a nuclear reactor, the cost of the fuel. So that's in U3O8 conversion, enrichment, fuel fabrication is only somewhere around 10 or 11% of the operating budget for the plant. So for like a coal plant or a natural gas plant, the actual cost of the fuel inputs are a substantial majority, to my understanding, of the actual cost of operations. Nuclear, it's not the case. So even if you were to apply inflation metrics to the cost of uranium and go back to $134 a pound, which is the peak of the previous market, if you apply inflation of 15 years, that's $200 a pound. And so while I'm not saying we're going to $200 a pound, I do think it's possible. What I'm saying is we need to go to a substantially higher price still. So while, you know, utilities that are on the margins of profitability, which some of them are, especially in the United States, that have to compete, we're seeing rising prices of all fuel inputs. And so and now we're actually seeing some more substantial financial support coming from the federal government in the United States with these production tax credits for nuclear. So that's a really positive thing for those reactors that are potentially considering shutting down due to profitability. They might be able to stay online longer. So long answer short, yes, of course, there is a price at which it doesn't make sense for nuclear utilities to purchase uranium at that price. So, but you know, uranium itself is only about 4% of the total operating cost for a nuclear reactor. So if we have, let's say, conversion and enrichment kind of rise a bit more and sort of peak out and uranium goes on a moonshot, they can afford that. Unless, you know, I mean, if we're talking like crazy numbers, like, and I don't expect this and I don't ever call for this, you know, I'm not going to like throw a Fibonacci indicator onto a chart and say, oh, according to this Fibonacci level, we're going to hit $650 uranium. It's like, no, I don't think we're going to. I mean, is it possible? I don't know. I suppose. I mean, nobody thought these natural gas prices were possible, right? In Europe, and look at what they saw a few weeks ago. But you know, what really we would focus on coming from a fundamental standpoint is where do prices need to go to bring on marginal production that it's going to be needed this decade, and that marginal production is, you know, $65 to $75 a pound 3 years ago. I mean, so we're talking probably $80 to $100 a pound is the marginal producer right now. And if we have high-ish inflation going forward, you know, that just keeps rising. And so I think it's practically a guarantee that we go north above $100 a pound in the spot market, and potentially even in the long-term market as well. And beyond that, it really is the buyer on the margin that moves the market. To your point in your previous question about what happens if we have, you know, ANU Energy or SPUT or Yellowcake coming in and seeing a lot of funds flow into those vehicles and buying up uranium. And I think a really interesting element, sorry to be long-winded with this, but this just popped into my mind, is looking out into, towards the end of the decade when, let's say, the bulk of Western utilities in general are covered for their uranium requirements. At some point in the next few years, we should see a long-term contracting cycle that covers utilities out towards the end of the decade. Generally, in most places, for most utilities that are planning on operating beyond that time period, right? Mm-hmm. Then we have this whole SMR situation on top of the financial players. And Sput has purchased, what, 40 million pounds in 12 months? I mean, it's unbelievable how much they purchased. So what happens if we see an actual, little revolution here with SMRs, and we actually see these things starting to hit the grid 2028, 2029, 2030? These SMRs could be the buyers on the margin. I mean, that really could drive much higher prices. And that would be operationally possible, because you'd probably have most of the nuclear utilities running larger, reactors that have been built over the past decades, covered for their requirements during that time period. And the SMRs need a significantly smaller amount of fuel. They could be the buyer on the margin, really driving prices to a place where, we're not even considering. All of that is to say, if prices get to a certain point, obviously new technologies come along. We already know about global laser enrichment. That is likely to be implemented. The only problem is commercial capacity is relatively insignificant in terms of global uranium demand. But that's one technology. They're trying to figure out how to get uranium out of seawater at a commercially viable price. There's definitely, developments on that front. It's nothing that's going to disrupt this market in the next 3 to 5 years, but it's something, there will be technologies going forward. There's a ton of uranium in phosphate tails, which is expensive to get it out. So, into the mid 2030s, into the 2040s, will we see significantly more laser enrichment? Will we see phosphate tails recovery? Will we see seawater? I don't really know. I'm just looking at this next long-term contracting cycle, and that's what we're looking at for the next few years plus.
Yeah, here's another kind of observation. Maybe you can add to the observation. Back in the 1970s, at least my interpretation, whatever, my opinion, I should say, when I look back, I noticed that 1970s, we hit peak oil in the United States. We hit peak, it came down, people started to panic. We had a large increase in oil prices. And I think, even though we had a large surplus in inventory of uranium, I think people viewed uranium or nuclear, I should say, they viewed nuclear as kind of the next thing we're going to go to, because we have current energy problems. And a lot of the people, they look inside uranium, they stay inside the uranium sector, and they keep looking at the news within uranium, news. Some of the things that I think may happen, and the paradigms that shift within investors, is they look at energy as a total and they say, we have massive problems in oil. And maybe we hit a global energy crisis, which we're going through, where we can't basically increase production of oil at any, we'll call it, measurable rate further than what we've got today. So we basically hit peak oil on a global scale. Natural gas, maybe we hit some sort of peak later on, but is there some sort of external factor in this where we hit peak oil, or we hit some sort of limits to energy growth in some other area where people look at nuclear, everybody lines up on it and says, this is the next best thing, money comes rolling in like you've never seen before? And if we've been in a surplus in history, looking backwards, and we're in this shortage going forward, in terms of underfeeding versus overfeeding, in terms of inventories tightening up, in terms of vehicles of these investments coming in and investors piling in these trusts and taking the physical money out, to me, it just seems like we've got a different environment than what we've seen looking backwards versus looking forward. So how bullish should one get, or should one be restrained? What should we be looking at outside the uranium sector, in your opinion? How would you view all this? Because when I look at it, I get a little bit overwhelmed, because it's like, man, this could be pretty big. And, it's probably going to even drive up even other investments like natural gas per se, and they'll both go up together. because those are viable alternatives. But, I'm just kind of trying to piece this all together. If a whole bunch of money comes in this and they just roll at it, there's not going to be any time to react in terms of the supply side. It doesn't respond that fast. So what does that gap look like? Like what? I don't know. I mean, maybe I'm looking at this from too much of a bullish picture. When you say 200, I click on a number that's way higher than 200 just myself because of the money that's in the system. Now, another observation, I know I'm adding a lot on here. I'm just kind of stating some things that I see. Last bull market in 2007, there was like 80 to $100 billion in checkable deposits that people had to really push, like retail investors to really go at this. Right now, there's 4.5 trillion. So if there's the right market conditions out there where money can't really go into bonds because of increasing interest rates and inflation, money can't go, let's say, into stocks because we have an energy crisis and all their inputs are getting beaten up and they're not making money, the regular, companies that use energy as an input, we could see a whole bunch of money turn and just run at energy just in general. Are you viewing the same thing as I am? Are you looking at it a little bit different? I'm looking at it from more of a money flow, what is available out there and how much money is out there to really, throw in these investments. How are you kind of looking at this whole thing?
It's I think that we're in a pretty complicated decade, geopolitically and economically speaking. I think for me, it's very difficult to forecast factors outside of the actual uranium market, going out beyond a few years. It's so hard to really tell. I mean, look what we just went through in the past 3 years, globally, geopolitically. As far as money flow, I certainly believe that it's entirely possible, and I actually think it's likely that money will flow out of what's not working and into what is working. And that's already happened. I mean, we're already seeing it right now. I mean, you just look at the performance of different industries this year, and what's working right now is energy. And will that have its up and downs? Of course. But as far as, really the financial flow aspect, let's call it secondary demand that comes from these funds, that's really kind of the wild card. It's difficult to predict, it's difficult to model, and it has the potential to drastically influence the price of the commodity. As far as projects filling this supply deficit, and this has really shifted with this bifurcated market, but the supply and demand modeling is certainly getting more complicated, and I think that those alligator jaws are going to widen significantly on these supply and demand modeling graphs that we've seen over the past years. Every 2 years we'll see a popular one come out from the WNA, the Nuclear Fuel Report. They're not doing one this year, but it's every 2 years, so we'll see that again next year, and that's going to be much awaited, obviously. But it takes a very long time for uranium mines to come online, and so really the saving grace in the next few years is the care and maintenance mines. So that's the Langer Heinrichs and the MacArthur Rivers, the ability for Kazatomprom and for Husab in Namibia and for the Uzbeks to increase production is going to help close that gap in the short term. And then the gap just widens drastically once we get out into the later part of the decade. So it'll be the greenfield projects that are really going to have to be supported financially and otherwise to come online to fill that gap and to have a functional uranium market and nuclear fuel market at any price. So that's, the marginal projects, so that's like Bannerman, Zitango, and Forces project, which I'm forgetting the name of it right now, Global Atomics DASA. What are obviously NextGen's Arrow project? That's not really going to come online with the snap of the fingers. Denison's Wheeler River, the Phoenix deposit. If all of these projects come online at their forecasted, projected timeline, which they won't, then we will potentially be in a situation where there's sufficient uranium to operate a functional nuclear fuel cycle. But again, it's the money flow question. It's the buyer on the margin. It's the financial flows and that secondary demand that's basically impossible to predict or model and has the potential to really be a buyer on the margin, especially for the spot price, and to really move this market to a place where nobody is expecting or predicting or can model. And so where is it going to go? I mean, I just don't know. I mean, and nobody knows. And if they tell you they know, they don't. So going forward, I believe that we will see a rotation of funds. I think that we are in the very early stages of a potentially multi-year commodities cycle that is going to be driven by persistent inflation and a focus on energy security. And I think that, I mean, everywhere you look, it's like, oh, you want to electrify everything now, says every single country. Okay. How much lithium are you going to need? How much cobalt are you going to need? Where does that come from? How does that fit your ESG narrative? Where does the nickel come from? Have you seen some of these nickel disasters in Russia? Have you seen how they operate in the DRC for the cobalt, which is the bulk of the world's cobalt? I mean, every single element is in some kind of shortage and some kind of supply deficit, and it really depends on the demand coming back. And for uranium and nuclear, I know that demand is there. The copper market tends to depend a lot on China's build outs, although it's becoming more of a supply story than a demand story. All I can tell you is what is happening now and what countries are telling us is going to happen. What is happening now is there's a nuclear renaissance. There's a focus on nuclear being dependable baseload power. Now that's hit some hiccups in France this year with poor maintenance over the past decade and droughts reducing river flows and things like that. But generally speaking, nuclear is seeing a renaissance. And if the demand that exists now exists and grows over the next 3 to 5 years, we are going to see a bull market for uranium, period. And so it doesn't really take any prognostications on funds flow and what that looks like for SPUT and the buyer on the margin. If you focus on the long-term contracting cycle, the actual demand for nuclear utilities compared with the actual mined supply, calculate whatever secondary supply you want to calculate. Right now, that's basically none coming from the West. The East is going to stay in the East. Russia's underfeeding is going to stay in Russia, potentially be sold to India or China. But the demand is going to be there, and we're going to see a bull market for this commodity based on what is happening now and an expectation that's going to happen for the next few years and beyond. Could there be exogenous events? Absolutely. There's always, I mean, to kind of circle back to part of your question, which was how do you not get super bulled up here? Well, it is difficult, but we always recommend making a rational allocation because these stocks are so volatile. They move so much. You don't need to be over allocated to the sector to see significant returns to your overall portfolio. So be rational. Don't buy short dated options. Maintain a functional understanding of the fundamentals to the extent that you can. Buy our newsletter. There's my pitch. We'll keep you informed of what's going on in the sector because it can get complicated. But yes, there's always a chance a drastic change to demand would alter this story. If all of a sudden China just said, oh, just kidding, we're going to reduce our 6 to 8 to 10 reactors per year, which they're planning out to 2035. If they're going to reverse that policy and slow down the builds, that's going to affect things. That's certainly going to affect sentiment. If there's a nuclear disaster of some kind, that will affect sentiment in the short term. That will affect the stocks in the short term. If it changes the demand picture, that could affect it for the long term. So there are risks. But as far as I can tell, for the short, mid, and potentially long term, it's a pretty unbelievably attractive investment case.
Yeah, the one of the things that I've noticed when I look out in the future, like say 3, 4, 5, 6 years, I see a blowout of deficits. This is looking at market balances, a blowout of deficits in a whole array of different commodities out in the mid to late 2020s. And it coincides very well with uranium. The thing that I get worried about is all of these kind of deficits will add up to some extent, and it will slow down, drastically slow down the speed that mines can be built, the speed that things can be produced. And I think we're going to just see a slowdown, like things will just move very slow to get this all up and running. So I'm a little bit afraid of some of the companies that maybe don't have infrastructure in place already, where it's like, I don't know if they can get into production too quick, and we're going to get this huge gap between, like where a problem hits, where it's like, hey, we need this stuff. Well, don't worry, we'll get it in 5 years, but 5 years is really 15 years. And it's like, well, that's a really big gap. That's because of all the shortages and all the other problems. And at some point, everyone's going to be fighting for all these materials. And at the same time, you'd be basically fighting for all these materials at the same time that you've got an energy crisis going on. So it's just a weird mix of market conditions that I don't know if we've ever seen before to this extent, to this worldwide in nature, because we've always had, a problem in America, and it's like, oh, we've got excess capacity over here. Oh, we got excess capacity over here. I just get a little bit afraid because, I'm just trying to envision the uranium sector doing its piece within this larger market conditions and how this all looks out in the 2020s and later 2020s, early 2030s. But you described it pretty well there. I think you see the shortages as well. There could be problems adopting electric vehicles. There could be problems adopting new technologies because the minerals just aren't there to adopt it at the speed that everybody wants it to be adopted in. So you have any closing statements? I'm just kind of talking in general of the conditions, because the market conditions, the way I view things, is what determines the value and pricing of these, commodities or companies. And if everyone, all these regular companies, if they're all needing this energy as an input, they all want it because they don't survive without it. Yet neither does currencies, neither does all this stuff. It has to have energy to grow and thrive and survive. Then it would be the most important thing in the world. And if it's the most important thing in the world, which is energy, I would assume that that's where all the money's going to flow at some point. So I don't know if you have any comments on it. I'm just kind of talking in general because, I look at uranium as or nuclear as a huge potential, like we almost have to go that direction over a long period of time, from the energy returns, the mineral intensity of it. You go on and on and on and on. I'm going like, I don't know how this doesn't, get moving quick and stay up there for a long period of time. And with the paradigm of coming from a surplus, everyone's thinking linearly on this. They think going forward that we'll solve it. It'll be no big deal. Everything will be okay. We've always had all these surpluses. I just think it's going to be a little bit tighter over the next 10, 20 years. And I don't know. I don't know. It's kind of my thoughts there. Any comments, any statements?
Yeah, I think I'm generally with you. I really think that there's a bright light being shined on nuclear right now, and it's unfortunate that it has happened largely due to an energy crisis, but it also has been moving slowly in that direction over the last, let's say, 3 or 4 years due to kind of an outsized climate panic, finally recognizing, oh, if we are going to panic about carbon, maybe we should look at electricity that doesn't produce carbon emissions. And nuclear is obvious for that, and obvious for anybody that thinks about it for 5 minutes without reacting emotionally. But nuclear, it's like, finally, it's kind of it coming to the forefront in conversations about energy. And people sometimes they get into conversations about nuclear, and it's like they know absolutely nothing about it. And it's like it's this fringe thing. It's not a fringe thing. I mean, there's 440 operating reactors in the world. That's a lot. It's 10% of global electricity, 20% in the United States. It's 30% of global carbon-free electricity. It's unbelievably vital. And I do tend to agree with you. I believe that there will be increasing amounts of attention and investment interest going into the sector going forward. And the recognition of its importance as a global source of clean energy and baseload reliable energy is not something that was baked into the thesis 5 years ago. It was really just kind of like, okay, well, if the reactors that are planned to come online and planned to be decommissioned kind of do, and the sector grows 1% per year, we're going to end up with this supply deficit, and the prices are going to rise. And that was at the time when, uranium was 20, 25 bucks a pound. And it's doubled since then. It's obvious that we're in a supply deficit and have been. The price doesn't rise in a supply excess. Okay. When there's an excess of supply of something, that doesn't lead to a rising price environment. There's certainly been some vocal critics about supply and demand modeling in the calculations of how that has happened over the past number of years. But the fact is, prices are up. It doesn't happen when there's an excess. So all of that is to say, nuclear is a really unique investment. It's one that you can actually kind of feel good about, if you actually study it and recognize that it is actually safe. It's the safest form of energy that's ever been conceived. Energy is important. Without energy, people die, people live in poverty. So expanding nuclear, this SMR revolution, it's something that you can kind of feel good about, while at the same time recognizing that it is important. There is a growing number of countries and a growing number of people embracing nuclear going forward. That's exciting. Will we see the funds flow into it that we expect? I believe so. Will that happen in the next 8 to 12 weeks at the backdrop of a weak broad market that looks increasingly likely? I have no idea. And I don't care. It's like, if it goes up, I'm happy. If it goes down, I'm happy in the short term. Obviously, I want the trade to continue to work out in the long term. It has worked out for me in the previous, 3 or 4 years since I've been positioned. It's worked out wonderfully. So it's been a great contrarian investment. And this year, we were presented with sort of a reset on the investment. We had markets go risk off. We had uranium equities pull back substantially. I mean, some of these stocks were down 30+%, 40+%, 50+% from the highs of November, down 30% in, year to date. Now we're back at break even, and slightly up on the year for some of the outperformers. But we got to reset this year. We got to reset with the backdrop of sputs here. The market is bifurcated, and we're going to see a 30+ million pound swing in supply and demand from a bifurcated market. Japan's accelerating the restarts. China says they can do up to 10 reactors a year. UK is building plants. France is building plants. SMRs, I honestly see a letter of intent or a memorandum of understanding signed almost on a daily basis with one of the SMR designers with a new country. I mean, it's every single day there's SMR news happening right now. And it doesn't equal demand tomorrow. But if these things are slated to be constructed in the later part of the decade, you better believe we're going to see demand 2025, 2026 for actual uranium to be moved through the fuel cycle to power these things. That is tomorrow as far as the uranium market is concerned. So it's all really lining up. Yes, it's volatile. Yes, it'll shake you out if you don't know what the hell you're doing and you don't know what's going on with the fundamentals. So it's super, super important to understand this stuff. That's my closing statement. The contracting cycle has begun, and we're about to see what price discovery looks like in the U308 market.
I like it. I like it, Justin. Thanks for coming on the channel. I really appreciate it. And hopefully we can have you back on. And if you guys made it to the end, definitely put something in the comment section. Put in Go Uranium Insider. Throw that down in the comment section. And we'll catch you guys next time. Thank you.
Thanks, Andy.